The S&P 500, the Nasdaq 100, when we look at the day, we look at how we started this day off overall, it was decent. It looked really good. We go with something like the 15-minute, the 1 hour chart. You get a visual of where we started the day at, right? Really pushing up here in the after hours, kind of getting that continuation. We talked about that level of 15,000 on the Nasdaq in particular, how we went into close and got a little bit rejected, but ultimately kind of flagging, continuing up. Good behavior. Market opens and it's just kind of down and weakening all day long. We saw a lot of that strength as well, with ES. That kind of led me to the belief we might get some continuation this morning to the upside. But again, nothing but weakness until the end of the day there as well. Now, the common notion and the common denominator here with strength, weakness continues to be semiconductors, right? We look at, for instance, NVIDIA. You open the morning at all-time highs, even though it's like 50 cents above or whatever, but still you're at all-time highs, and then nothing but weakness throughout the rest of the day. Okay. Now, the one thing I do want to tell you right now, when you look at NVIDIA, AMD, semiconductors, the options market right now is actually pricing in a bigger move than the implied volatility on said options. Okay. So the option market is dumping so much money into NVIDIA that they're pricing, I believe, like an 11.5% move, whereas brokers and the expected move on options is around 9.5, 9.7. It might have kind of trickled down near the end of the day just because you had like flatline and a little bit of IV crush there, but still, the whipsaw's been crazy. If you look at what's happened over the week, we've had a push from ultimately 403 into where we are now, like over the past like 7 overall days into 480. So crazy volatility, it's happening. But what I will say is, again, you saw that continuation yesterday. We talked about all that strength. And then when semiconductors couldn't perform, guess what happened? Market went back down. Now, again, things to be looking at too. We look at overall volume. Again, it gives us one of the best viewpoints of what's happening here. And again, volume kind of lackluster on the day. Buyers not really doing much. Neither are sellers. Now, there is one underlying factor that I believe today we have to talk about that happened with the Fed, and Fed members already kind of discussing potential scenarios and kind of setting up Jackson Hole. That has got to be the number one thing we're going to talk about today. But before we get into that, I ask you to consider doing two things. Liking and subscribing helps out the channel tremendously. Every single day we make content for you, so you're prepared here on the market and you know what to expect. Also, too, the Discord link is down below if you are interested. You can see everything, what we're looking at in real time, how we're trading, why we're trading, and hopefully getting to that point where you don't need a mentor anymore. You don't need someone to kind of hold your hand through the market, right? But if you want to be around a community of over 900 plus traders, an actual community that we're involved in every single day, helping you step by step where you can answer questions as well, it may be for you. Check it out if so. But if not, you also have the free education. Go over home, go to education. We don't sell a course. So if you want to learn on your own, it's all there for free. So make sure you check it out. Now, the biggest thing, Fed barking. I told you guys Fed members would start speaking on the day. And actually, before we go into the Fed members speaking, I want to talk a little bit about some of the data you got today. So we talked about home sales that were coming out, and then also Fed members talking. Home sales, again, continue to go to the downside, right? Just down, 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 as you can see here. And basically, since March, February's reading, it's been nothing but downside. Even though this is, again, people need to understand, if you're calling for a bottom on the housing market, it's hard to do that, one, in the summer, which is the best time overall for the real estate market, I'm going to tell you right now. And then number two, while you're still going down and rates are still going up, it's hard to say that, okay? Now, this is interesting. And this, again, gives us a little bit of insight maybe into what Powell says. Now, what we need to understand, what you need to understand is Jackson Hole is going to be a roadmap over the next year. Okay, that's what it's going to be. And so you don't go into Jackson Hole thinking, okay, Powell's going to tell you what we're going to raise rates, we're going to do this. No, it's a broad view of how the Fed is going to attack inflation and how they see the market and how they see overall health in the economy. So Barkin isn't one of the top Fed members, but still important to see like where they're filling everything out. Strong U.S. data makes a reacceleration scenario possible, Fed Barkin says. Now, what he said was this specifically. The Fed must be open to the possibility that the economy will begin to reaccelerate rather than slow, which I don't know why he says they need to be open to that, because that's already what's happening. The economy is accelerating. Growth projections are continue to rise. So I don't know why we're saying that. With potential implications for U.S. central banks' inflation fight. Okay. Again, I want to say this. I don't know why they're saying we need to prepare for this possibly, because it's already happening. Consumer credit, very high. We've known this, right? We've known this. Even though we've been bullish on the channel, we've known the underlying issues. We trade what's given to us, and then when data starts coming in bad, we adjust. Retail sales were stronger than expected in July and June, and then the month before that. So again, I don't know why they're just talking about it. It's like they're surprised. And the consumer confidence also rising, the reacceleration scenario. Again, consumer confidence continues to rise month after month. Not a surprise. Has come onto the table in a way that really wasn't there 3 to 4 months ago. Okay, again, I'm saying this. They're saying it wasn't there 3 or 4 months ago, but it's been there so far. Understand that. Okay. That includes the possibility that inflation stays high and the economy strengthens. I want you to understand this. If the economy continues to do what it's doing, it's very likely, one, inflation can become entrenched, which would be very bad for the economy. Powell continues to say that would be the worst case scenario. And then number two, it's going to lead into this, which lets them push more rates, which again is the worrisome part, is that Powell says there's a new normal there. Barkin said, if I got convinced that inflation was remaining high and demand was giving no signal that inflation was going to come down, that would make the case for further tightening on monetary policy through higher interest rates. What does this mean? If he says the market continues to strengthen and GDP growth continues to happen, and there's no weakness in the economy, specifically you and me, the consumer, we continue to spend, earnings continue to do what they're doing, right? People are like, oh, we're having terrible earnings. You're just having flatlined growth. You're not really having negative. We saw some negative in 2022. It made sense, but now we're just like flatlining there. Eventually, it will drop, okay? For further tightening monetary policy, higher interest rates. Retail sales were 0.76 in July, far more than expected. The economy grew at 2.4 annualized rate in the second quarter, well above the Fed officials would feel for inflation to cool. Okay, so that's the big issue. They keep saying soft landing and all this stuff. So again, I don't want to go over that. He also said he would not prejudge what the central bank will decide to do next month as far as raising rates. Okay. But he also said that 2% is a target and they cannot change their target because it would lose confidence in the Fed. I think that was one of the biggest things that Barkin said today. And again, this is all a leading indicator to what's going to come from the Fed on Friday. Okay. These are all things you have to be taking into account. Now, when we look at indicators based on this that are interpreting the Fed, now I will say when we look at the dollar, when we look at yields, when we look at these things, you need to understand, I do believe the dollar, I do believe yields, they're pushing up into this meeting, but in my opinion, they have no idea what's going to happen. I'm going to tell you that now. And I also believe there's a lot of hedging going on. But what I will say is the dollar looks incredible. Yeah, the descending triangle, continuation to the downside, a trap, and now you're mounting above the daily 200 MA, bull flagging and trying to break out here on the day. Very good action. Very, very good. We go a step further into the 2-year yield. It's been moving slower than the others, but now we look what's happening. It's pushing to that breakout point. It's going to be at that top of the breakout point at least by Friday, before Powell speaks. It will be there. My opinion, even if NVIDIA does fantastic, I think it sets up even a higher chance of the 2-year yield rising. The 5-year yield breaking out as well at highs. The 10-year yield already broke out, kind of a little bit down. The 30-year yield there as well, right? You're all there. The inversion is back almost to 99%. The 10-year over the 30. These are all leading causes for concern. Only good thing here is that oil is coming down here. Only good thing. Only possible good scenario that's happening here on some of these indicators here. Okay, now a step further. We look at NQ. We look at what's happening here. Again, NQ, we came into that level I mentioned, that 15,000, and just showing you what I'm looking at. It's these previous lows here, right? This comes you can just bring it back. You just see, and I'm bring it back. Hey, I'm not gonna lie, took me back through a time machine for a second. But we look at this level. This is about 15,000, 15,050, right? You're rejecting so far. Sellers and buyers cannot push you up. Buyers cannot push you up. Sellers will push you down even with the minimal volume. It's important to realize that. Again, minimal volume is pushing you down here. What does that tell us? Buyers do not have strength to continue pushing you through. Specifically, semiconductors are not going to be the only thing that's going to be able to take you unless NVIDIA posts the craziest earnings of all time again, right? Understand that. Yes, very similar structure here. What I'm looking for in particular is this level right here. So it's around 44.12, right? So that low there, You can also see when you come into like the 4 hour, there's more of this level right here where you bounced, lost, bounced, pushed down, and now you're pushing down again. So again, sellers pushing you down again, right? And I want to put emphasis on this. You're being held down with minimal volume, okay? So that tells me this move here, I don't have a lot of trust in it. I'm going to tell you right now. And giving you a visual, getting rid of some of these drawings here so you can get a better look at what's actually happening here. You look at something like let's keep it on the 4 hour, right? Just give you the best view possible. You know, giving you a view of what I'm watching. Now, it's not the prettiest setup because you did wick above. But if you look at this area here, in my opinion, it looks like you're still set up for a downside flag. It looks like a continuation here. I'm just saying, you look at volume, look at that volume you've had. You had a little bit of volume down there in the 18th and 17th. But overall, nothing great, nothing fantastic, nothing that is getting me excited. And a lot of that volume is when you're pushing down to those lows, okay? So understand that when you're pushing down here at the 18th, and then we come into this week, volume's very lackluster, very slow, and we're just going to the upside here. It's setting up for that, potentially. But I want to say this right now. I can like this setup. I can have the continuation. I can have this and have that. But at the end of the day, if NVIDIA comes out tomorrow after hours and we have incredible earnings, I'm willing to bet my left testicle that you're going to shoot up, right? You're going to have short-term upside no matter what. So I have to keep saying this. The number one thing that I'm looking at right now is what's going to be happening after this week, what's setting up into the end of this week, and really pushing the narrative of being cautious above all else. So going into tomorrow, going into the end of this week, what is my expectation? Honestly, we cooled down a little bit on NVIDIA, so there's a high possibility that NVIDIA does decent on its numbers. I'm going to tell you right now, NVIDIA's earnings, I don't see how they don't meet expectations personally, unless they didn't have enough supply to meet the demand, and meaning that they just did their numbers wrong on their sales. Because to my understanding of what's happening with NVIDIA is they just don't have enough product to continue selling. So that's a really good issue to have for them. So I think NVIDIA has a lot of potential upside, especially when you look at things like Tesla. And it's totally possible when we look at NVIDIA that they continue to raise expectations. I'm just saying, totally possible. Okay. You know, we have companies that are flocking to these AI or these chip manufacturers for deals moving forward. We have AMD with Microsoft, which I think AMD is super undervalued in comparison to some of these names. But again, you know, Tesla verbally saying we wanted to get more chips from NVIDIA. They just don't have the supply for it. That's a good thing for NVIDIA. That's good news. People want to go to them. They just don't have any more products. That is a good thing. Customers lining up at the door. So it's very possible that NVIDIA keeps this trend going. 100%. If you don't believe me, look at the option chain for September 15th. It's incredible. The 500s, the 550s. I've mentioned those names quite a few times while we've been here. So make sure you're looking at those. But again, there's a lot of people betting big on these earnings. So it wouldn't be a surprise. But when we head to the end of the week, that's where things really start to become apparent about what's happening here. And I think that Barkin's comments definitely shed some light on some possible issues. And I'm telling you right now, if Powell comes out with that notion, and I'm pretty willing to bet Powell's not going to change too much of his tone, meaning I don't think he's going, I'm going to tell you right now, I think he's going to keep the 2% target on inflation, which is bad. That's bad news for the economy because we're not close there. I don't think it's going to happen tomorrow. I think it's going to take a while for us to get there. So 2% inflation, not good. I think he's going to stick to it. The massive red flag is I don't know where he's going to stand with the path moving forward on rates. Because right now, even with me, I'm guilty of it. I thought that there was a high possibility, unless data came out bad, which data did come out bad, but nothing bad on CPI or PCE. I thought there was a high possibility that we were done. I really did. I marked it on my calendar so I can admit when I'm wrong. And I have to be prepared to adjust based on being wrong sometimes. So that's things that we have to be able to be accountable for. And so when we look at this behavior and what's happening, and we look at how the market's moving and what's happening with the dollar, what's happening with oil, what's happening with yields, it causes some major signs of concern, especially with all the downgrades on banks, right? These are major issues. And if we start seeing a resurgence of what happened in March with banks, I don't know if we're going to be able to withstand it. I think it might cause a lot more of a domino effect than what we saw in March. It would not be good to have two banking crises in the same year. I'm just saying that would not be good news. And if rates continue on this path, I think it's highly probable that we see a March 2.0. I'm just going to tell you that as well. So again, This week specifically, end of the week, sets the tone for banks and what's happened across the board. And if you don't believe me, the importance of what's happened to banks and what could happen to banks, again, what was the underlying fact that took us from 4,200 on ES up to up to 4,600? Once XLF and banks got support and started pushing through and breaking out of levels, well, guess what happened? The market went crazy, right? I mean, it's simple fact. Go look at what happened. When you broke above like 42.50 on ES, it's because XLF started to recover quick and fast. And we saw other areas of the market start to move as well, specifically with the Russell. So that's what we were seeing. And we were always prepared for that because we kept talking about it. We're like, well, what's going to happen when something besides AI and tech get love, right? And so that's the reality of what's setting in here, right? And so when we look at a broad market, again, I think this is the underlying tone of what's going to happen. I don't think that if Powell comes out with a really negative tone that we're going to see tech just collapse. I think it's unlikely we see names like NVIDIA, AMD, Tesla, Microsoft, Meta go anywhere near their lows. Very unlikely. Very, very unlikely. But we will see other names, less strong names, mid caps, get torched again. And this will not be good. And we probably will see some downside on semiconductors. But it won't be, again, nowhere near the lows. Nowhere near. I think those lows are out of the question. Don't think it's going to happen. I don't care what anyone says, bubble, whatever you want to talk about. Again, that's my opinion. That's how I'm addressing this and kind of taking precautions going into this week. Let's get back to the charts. Okay, so what I'm going to do before we get out of here is I'm going to wrap it up with a few names that I'm looking at. And again, I've been kind of precautious with going over some of these names because I don't want to get into like any plays until Friday. I just don't. I want to hear what Powell says and go from there. So number one, I think in Netflix is the play of plays. And I'm only mentioning this because I put it on Twitter earlier as well. So if you're following me on Twitter, which again, I recommend you do so, the link somewhere down below. But anyways, so this is Netflix, right? So what did we say here? We were looking for and this was like goes way back. We were calling this out like at 424 or whatever, right? So you push down to around target, pushing back up to 200 SMA. That's your entry opportunity for like confirmed head and shoulders, in my opinion, right? So, fast forward to today, what happened? You push down, you push back into that 200 SMA. This is where we're at now. You're pushing back in. This is the 200 SMA on the weekly time frame. This is your head and shoulders that's formed. It's a really awesome opportunity where you're at. I think you need to be, again, be cautious, but it's a really awesome opportunity. Risk reward makes sense. Your target's down at 375. I mean, honestly, it could get torched even more than that because, you really have room down to 350. But again, this is like overall where I'm targeting, how I'm looking at it. It looks really good. I like the setup. It's there. NVIDIA, semiconductors, I'm not super interested. But I will say AMD. So AMD, technicals aside, let's kind of throw technicals out the window here for a second, right? I will say, let's just talk about some key areas you're at. You're clearly in a downtrend. You're still moving down. Okay, people might call us a wedge. I don't really care. So if you look at what's happening, you're below your support that you had back here when we started going long. If you remember, you'd be on the channel, you go back to like June, whatever. We were heavily long in AMD. We rode it back to like 119, got the hell out, right? Especially on that double top. Okay, you broke that support. You retested 109. You got rejected and pushed down. Very bad. Now, if you look at the options chain, I'm not going to pull it up right now, but if you look at the options chain specifically on AMD, you can go out to January 2025. Okay, look at the 90s on the downside. There was a lot of volume coming into those. It's the best hedge if you're playing long on semiconductors. Okay, let me give you a trade idea here. Okay, I don't do this often, but I'm going to give you a trade idea here when it comes to options and playing earnings. You can really play this. I don't know if it's a strangle straddle since they're different option chains. I don't know the definition right now. I just got to the gym, tired, but hear me out. The 90s for January 2025 for puts. If you want to play the upside, the $150 calls for January 2025. They both move great. The optimal side of things is if you move up, you'd make the most money, but you're still very protected on those 150s as well based on previous lows and where you were at. So I want it to be known. It's a really decent looking opportunity. I think you're pretty protected. And I believe you'll make money either way if you trade those. Personally, that's my opinion. Do your own DD, not financial advice. AMD, has the most potential here, in my opinion, based on the IV crush. And I do believe no matter how NVIDIA prints, I think AMD is going to get a big move in either direction. It will get it. Pretty positive. Feel very confident on that. Okay. Want to let that be known. And I think there's a very big notion in the market that AMD has to produce. Let that known there. Tesla. People keep asking about this. Tesla was really simple, and I know people have questions on this. You had a 240 slap. This was probably in the newsletter as well. Jay did the newsletter. But yeah, you came up to it, got rejected, came right back down to your key level, 232, held it all day long. So nothing really to go on here. If you get below 232, you don't look good. What I will say, not ideal. Not ideal how you're acting here. You can clearly see, have a little bit of a pennant forming out here. If you get below 232, I'm looking for weakness back down into locally 229.8 and then down to roughly 225 pretty easily. Those are the targets I'd be looking at. Quick trade you can look at for tomorrow as well. I'm not going to go over too many trades. This is what I'm looking at. These are the opportunities. Last one, sorry, I really don't want to go over too many, but AVGO broke up, came back into 850. You'd be looking for a bounce back into 864. If you get back over 864, potentially into 873. Those are your levels there. That's what I'm looking at. Good luck trading tomorrow. Hope this helped. If you have questions, comment down below. See you guys tomorrow.